much, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and we can see a normal Monday market. There is not much volatility. Gold is trying to recover after the big fall on Friday. I shared my buy position at 2324 with you guys. I was hoping for a big bounce, but as we can see that right now gold is struggling around the 200 moving average, so I have exited from my buy. I'll be looking for a new position by the European session or by the US session. So my dear friends, on Saturday we talked in detail about the confusion on the chart of gold and how gold is making us crazy. So whatever we discuss are still very much valid. The levels we discuss are also valid right now because we can see that there is no significant change on the chart of gold. For example, we discuss about the weekly chart, okay, where we can see that we have a bullish flag type of pattern. It may not be a perfect flag, but yes, we can see the market is standing at a swing high where we have a contradiction because of the flag pattern. Okay, gold should go up towards 2600, 2700. But on the other hand, we can also see that market is standing at the swing high, which is not a very good sign. Means if gold comes down, okay, or it should come down because it is standing at a swing high, okay, we should not be surprised. So contradiction on the same chart of gold on the weekly time frame. On the other hand, if we go to the daily chart of gold, we can see here that market is showing a W type of pattern or market is trading inside a range, so total confusion. If we go to the 4-hour chart of gold, we can see a sideways or a choppy market. So every time frame has a different story. So that's why we need to be extra careful right now. So my dear friend, if you're a beginner, if you're finding it very difficult right now to trade, then stop trading on gold as of now and you can switch to a pair like GBP USD, USD JPY or some other pair. When things will be normal again, you can come back to gold. But right now, gold trading requires little bit of experience and proper risk management. Otherwise, your account will be fried. Though we discussed on Saturday, but I would like to repeat again, my dear friends, that in this situation you should be careful again because we do not have a clarity regarding the direction. Especially if you are a positional trader, then you should wait for some time, let the market show a proper trend, then you can go for a buy position. Obviously, as a position trader, you should always be on the buy side. Okay, and if you're a swing trader, this is not the ideal movement because from here market may go up, market may also break the previous low and go down. So swing traders, okay, stay on the sideline and wait for the right movement. And if you're a day trader, then obviously safety should be your first priority and level to level trading should be your trading strategy right now because in this market condition, okay, in this market condition, if you're planning to sit on a trade and earn 100 150 pips, then it can be a very bad decision as well. So okay, capital protection should be a top priority, and as a result, okay, level to level trading seems safer. Okay, and if now let's look at the economy calendar. We can see today we don't have any major event for the day, so we can expect the present market sentiment to remain. What is the market sentiment then? Gold trades flat. Investors looking for new catalysts. Okay, so today we can expect the gold to remain like this. Okay, so this is the ongoing market sentiment. And if you look at the forex sentiment meter, okay, you can see this is a sentiment meter where it shows the position of the retail traders. We can see here 52% are on the short side and 47% are on the long side. So the retail traders are also confused regarding the direction of the market. As a result, we can see the almost equal number of buyers and sellers on both buy and sell side. So the forex sentiment meter is also telling us the same story that we need to be careful regarding the direction. Now let's talk about or just go through the trading opportunities for today. So my dear friends, as we can see right now that gold is trading or struggling around the 200 moving average. There is not much volume also. This is the main reason I exited. So let's wait and watch. If market shows one or two small red candles, I will not be surprised here. So the next selling opportunity may come around 2329 or 2330. This is the first level. During the US session, usually we see volume. So during the US session, this level may not work. Okay, because this is the immediate level. We have this second resistance around 2335 to 2336. This is the second level. The box that I have drawn here is the second level where we can look for a selling opportunity, and the third selling opportunity will be around 2343. These are the three levels where we can look for a sell. At this moment, we can see the market is showing signs of recovery, but we can also see that there is not much volume in the market. And for a trend reversal, we need the backing of a fundamental factor. But at this moment, there is no news, there is no proper fundamental reasons also. So that's why, okay, respecting the Friday's selling pressure, we are looking for sell on rise here, or we are looking for selling opportunities for as a day trader. You can see here at 2330, 2329, we have FIBO 23.6% retracement level. Along with that, we have the previous support acting as resistance. Okay. But this is the first level, so not a very strong one. So if market breaks it, okay, we have the second resistance around 2335, 2336 because of FIBO 38.2% retracement level. You can also see the 100 moving average, which was the support previously, will be acting as resistance right now. Okay, and the previous support will be working as resistance. And here we have FIBO 50% retracement level around 2343 area. So these are the three levels where we can look for a sell position if we see gold going up, because right now there is not much volume. But on by the US session or European session, if gold surprises us with heavy volume or big green candles, then obviously you don't need to look for a buy position. My dear friends, there may be many levels on the chart, but you don't need to trade on every level because it is not possible. If you see the market is standing at resistance with a big green candle, obviously you need to avoid selling. We need to understand the condition of the market. And on the other hand, if gold doesn't go up, okay, if gold doesn't show retracement, and if we see gold going down, then we can look for a sell around 2316. But just make sure that if the size of the candles are like this, then avoid selling at below 2316. Why you need to avoid sell? Because to break any level, not only on gold, okay, if you trade on stock market also, if you trade on other markets also, you need to understand that to break any support or any resistance, market needs volume. Without volume, there cannot be a breakout or breakdown. Without volume, if market breaks a level, then there's a high chance that market will be going showing a false breakout. Okay, so if market breaks 2316, observe the size of the candle. If the candle is good enough, you can go for a sell. But if you see this candle is not very significant, size of the candle is small, if you want to go for a sell, you can go for a sell. But after 20-30 pips, okay, market may reverse again. So you need to make sure that you are exiting at the right time. So if you take a sell, then okay, your TP should be around 2311, 2312. Okay, this should be a TP1. If market hits TP1, then just observe the selling pressure. If the selling pressure is still continuing, then you can continue with the sell. But if you see that somehow market has reached 2311 after the market is showing price rejection from up below, then please exit from the sell as well. And already we have discussed many times that the next support on the chart of gold is around 2300, 2304, where we can expect a good bounce. At least we can expect a one bounce. But at this moment, there is not much volume in the market, so let's wait and watch. Okay. One important thing I would like to share is that for the last couple of days and weeks, we have seen the market is very volatile. Things are not going very well. Okay, you may find it difficult to trade in this market. You may also lose your confidence if your strategy is not working. Just keep in mind that market changes from time to time. Okay, if this is a bad phase for you, then you should not lose confidence, because in every market condition you cannot expect to become a master. Okay, you can be a master of the trending market, or you can be a master of the sideways market. Okay, you don't need to become master of every market condition, so do not lose confidence. So if you want to trade right now, you can trade, but yes, you need to understand that if the market is very unpredictable, okay, then you need to look at the safety first. Previously, if you were targeting 70 80 pips on your trades, then right now you need to target 20 to 30 pips, because as a trader, survival is the most important thing for us. So let's hope for the best, and let's hope for better days ahead. That's all from my side, my dear friends. Thank you so much. Bye bye. Take care.